Good morning, everybody, and welcome back to Squawk Box. Excuse me. Let's take a look at how the commodity markets traded in the overnight session. It was a mixed performance across the board, but broadly speaking, we did see some strength emanate out from the energy sector, both NYMEX crude and also Brent crude rising. However, the gap between the two widening a little bit here. We did also see a little bit of a pullback in the precious metal space. In fact, spot gold prices just ticked down to about 13.21 in the overnight session. Spot silver's been an interesting trade. You tend to see more exaggerated moves in the poorer or the richer cousins, for want of a better description, and that price has been very well supported over the course of the last few days. Platinum prices as well. We did see some underperformance in US copper prices overnight. Bear in mind, of course, we've had a pretty strong run of late, including LME copper and Shanghai copper, on the back of fairly strong economic data that we saw out of China, which, by the way, is probably the biggest buyer of the stuff. And finally, we did have a little bit of movement in iron ore prices once again. It's dramatic runs in that price up to 141.8 in the overnight session. All right, I'm joined right now by Mark Keenan. He's a cross-commodities research strategist at Société Générale, joining us in the studio this Wednesday morning. Mark, thank you very much for getting up at this very early hour. It's very good of you to come in.
It's a pleasure.
I just want to talk to you about the shifts and trends that you note, that you've been noticing. Are you saying that, basically speaking, all this noise about tapering is dying down and that investors are now coming back to the fundamentals?
We are, yes. Certainly one of the striking trends at the moment in commodities, and it's very much been so for the last 3 months, but specifically over the last month, has been a massive resurgence of commodities now tracking their fundamentals, and by that I mean their supply and demand dynamics. And this really stands in stark contrast to what we've seen pretty much since the crisis, where commodities have been swayed by the macroeconomic environment, obviously, specifically Europe and so on. And what we've seen is that commodities, their correlation has been extremely high. We've had many expressions where we've seen correlations tending to 1, this risk-on, risk-off type environment, and that looks to be very much receding at the moment. So supply and demand dynamics coming back to the forefront of driving commodities, and we expect as a function of that correlations within the sector to decrease, correlations of commodities to other asset classes to decrease, and the interest therefore as commodities as an asset class for investment purposes to come back to what it was pre-crisis levels.
Okay, Mark, but why are we seeing this shift at this point in time?
Well, one of the reasons is that there's certainly been the macroeconomic risks moving a little bit further onto the back burner. But one of the interesting and possibly more subtle effects is as we approach this QE ending timeline, as it were, and we have the associated macro shifts in terms of rising yields, a strengthening dollar. What this has, the effect that this has on commodities is to reduce inventories, for one, which have been significantly high over the recent periods, and much of this has been related to trade financing in this low interest rate environment. And as yields and interest rates are predicted to rise, so inventories start to fall because they become uneconomical to hold. And as we get this reduction in inventories, so we get an increase in sensitivity of the actual underlying commodities to their supply and demand dynamics, because that cushion to insulate these markets from shocks, as it were, is now being dissipated. So going forward, if we see that, this is really a very positive underlying trend in the market, right, and should stand us in good stead going forward.
Well, why then does that not apply to the investment thesis for gold? Why are we not seeing that correlation?
Yes, no, that's I mean, gold is different to the other commodities in terms of its supply and demand dynamics, and it's always very difficult to quantify exactly what constitutes fundamentals in gold. And gold will behave very differently in the context of QE, and we've seen you know, much of the recent weakness that we've seen in gold has been a function of this tapering effect approaching the end, as it were, in September. So gold we expect to continue to weaken. This recent bounce that we've seen as a function of physical buying is frankly a very good selling opportunity. And we've seen last night yet further increases in the Indian import tax, up to 10% now. So this strength, it's struggling technically, and we see it lower from here.
Mark, thank you very much for that. That was Mark Keenan from Société Générale. Squawk Box will be back shortly after the break.